Hello traders and welcome to another video review. Today is Tuesday, October 10th, 2023. Let's find out what is going on the Forex economic calendar today. Some data had been published overnight. Most likely the most important one were from the Japan adjusted current account and current account not seasonally adjusted. Both of them were way lower than the expectations. New Zealand data were published as well in the form of the NAB business confidence and building approvals. Most likely they were in line with the expectations, and during the London session we got only data from the UK in form of the labor productivity for the second quarter, and a sharp increase is expected here from -1.4% to 0.7%. Then at 2 o'clock we have the ECB President Christine Lagarde to give a speech, and during the New York session we got the speech from the FOMC member Bostic. Then we have the speech from the German Buba Balz at 6:30, and at the end of the day we got speeches from the Fed Waller at 7:30, and at 9 o'clock we got another speech from the FOMC member Kashkari. So, no important data released during the New York session. Plenty of the speeches are scheduled for release. So it looks like a kind of a easy day on the financial markets. Let's start with something that happened overnight with the Japanese data, and this is why we are going to take a look at the 4-hour chart of the US dollar versus the Japanese yen first. So the US dollar versus the Japanese yen chart looks like it's bouncing from the recent lows. Let me just explain where is this low I'm talking about. So this is the low 148.18. And as you can see, we are most likely heading towards this level here, 149.54. The big and very much visible pin bar here is our point of reference, is our level and kind of a market behavior as well that will guide us through the next few sessions, because as you can see, it is very wide. The high is at the level of 150.17 and the low is 147.39. So this is roughly let me just take a look here at my tool, price range tool. This will be like 2% or something like this. There you go. It's yeah, minus 1.85% in one 4-hour candle. Okay, so that's a pretty impressive result for this market. Nevertheless, please notice the fact that this US dollar to Japanese yen market has been moving up for quite some time now, and the uptrend is still intact. This price action here is just some sort of the let's say pullback or maybe correction during the uptrend. So nothing wrong is going on yet on the US dollar to Japanese yen trend, but please be careful and please remain very focused when you look at this market, because of this very interesting candle here. There's something is going on here. The bulls are keep trying to move higher. Nevertheless, let's find out later if the level of 149.54 is the actual nice technical resistance strong enough to push the prices back lower again. So that's the US dollar to Japanese yen. Let's find out what is going on gold. This is 4-hour chart of gold. As you can see, we opened with a very nice gap. I'm trying to find my rectangle. There you go. So let me just show you guys this gap. So something like this, let's say roughly between 1,000 1833, 1844, $11 gap. So right now, after this short bounce, the market is trying to fill the gap back on again, especially because we just hit the extremely overbought market conditions, and the market were trading just below the 100 periods moving average located at 1868. So let me just zoom in. Don't know if this is okay. Maybe we'll stay like that. The recent high was made a little bit above this, little bit below the 100 periods moving average, 1864. So roughly $4 lower, and now we are. It looks like we are approaching this zone here to cover, to fill the gap. Of course, this gap might work as a support zone or level, or if in the case that the gap will be violated, then of course what will happen is another extension to the downside, and the target will be the swing low from the October 6th 2023. So that's the gold. Let's find out what is going on with the S&P 500. And for our chart of S&P 500, let me switch to, okay, let's stay. If you remember correctly, we analyzed this market recently, and we mentioned that maybe there might be some sort of the extension to the downside because of the ABC correction. So that was the high, that was the wave A, wave B, and wave C, and we extended the drop below 100%. And we made a low at 4,200, so that's roughly 1.27. So there is some sort of the let me just get rid of this. There is some sort of the ABC correction being made, or even made on this time frame on S&P 500. So this is what I mean: A, B, and this is the C. Alright, so if we zoom out, we can still see that this is a quite big correction. This is not a pullback, this is a correction. Okay, so that big correction might be completed, and as you can see, currently we are testing the lows of the wave A. Okay, so let me just make it a little bit. There you go. This is the lows of the wave A, 4,339. Let me just switch back to this market, zoom in, and what do we see here is a very nice approach towards this level. Please notice, very close, there is 100 periods moving average, 4,348. So this might look like the key. I don't want emoji, I want my arrow. This might look like the key level, key technical level for the bears, because they will defend it. If they will defend it, they need to push it lower, of course, right? So please keep an eye on this level. Please keep an eye on the current market behavior, because any violation of this level would open the road way higher. The next, let's say this is the zone, so that's the other level, so that's fine. And the next target, eventually the next target for the bulls would be located somewhere at 4,430. Okay, so that's not even the wave B top yet. On the other hand, of course, we got this level here, which is the technical support, 4,200. There's no doubt about it, and that might be the bottom for the wave C. One last thing. ABC correction to the downside. This one looks like a zigzag. 1, 2, 3, 4, 5, and 5 ways in the wave A. Okay, but please remember that the zigzag might evolve into double or triple zigzag, and it might even evolve into more complex and time-consuming correction as well. So just because the market done ABC correction doesn't mean that potentially this market will not do anything else, will not extend the correction to the downside after some kind of a connector is made here. All right, so what we need actually is a very strong, very dynamic and aggressive impulsive price action to the upside. All right, so then we can exclude the situation when the connector is being built in the impulsive wave, because impulsive waves most likely will indicate that the previous trend is being developed back on. Right, so please watch this market here. It doesn't actually look that much impulsive just yet, but we need to know what will happen when this area here is violated, when this area here is being traded. What will be the response of the bears? Of course, will they fade it and push it lower, or they will throw the towel, and then of course the market will rally way higher. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.